Good afternoon, I'm Brigid Taylor and this is Currency Wars. Let's have a look at the wires. European Central Bank President Mario Draghi defended the bank's decisions to implement quantitative easing. Draghi stated that there was financial stability risks associated with the program, but that the bank's macroprudential policy would help to contain such risks. If we look at the carry trade returns, however, especially in emerging markets versus the euro over the last month, 21 of the 23 emerging market currencies see returns which have also outstripped the losses that we've noted on the same basis versus the much stronger dollar. This implies a net positive carry effect for emerging markets from the European Central Bank's quantitative easing decision. However, the rand ranked 16th out of those 23, with losses of 4% over the last month. And this is poor relative to the positioning of the local currency. And it speaks to the underlying fragilities and a lack of corrective action taken on the side of our monetary policy and fiscal policy to offer a buffer. The trade-weighted rand performance has seen losses of 2.5% month to date. Oil prices continue to deteriorate as demand from the US remains muted and stockpile continue to grow. This, however, is being offset by the currency deterioration, which does not indicate any significant benefit currently to our consumers regarding the petrol price, which potentially could be adjusted downward. Today I've got Andre Cilliers from Treasury One and Sluis-Cremer from RMB. Thanks very much for joining me, guys. Okay, interesting times again. It feels like 2015 is going to keep us on our toes. So we were talking offset and just saying, it's a market that, as much as there are fundamental issues, they're kind of slow to come to light, and we're aware of all of these. It still is a carry trade conversation. So we've seen the comments out of Draghi. We've seen the ECB being very anal about the fact that they are going to support this policy, and people are piling out of the euro. So let's talk about what that means for the rand. From an RMB perspective, Jan, talk us through euro sitting at 105. What does that mean?
Thanks, Reg. Euro's down at 105. It's kind of ticked up a little bit this morning. I think it's perhaps in the short term a little bit overdone. But we have seen, and where your carry traders come in, we've seen euro rand starting off around about 13.20 this week, and we finished back below 13 again last night. We currently 12.90. So there's definitely carries coming to there. Perhaps the rand overshooting to 12.37 was probably a little bit too far. But I do think that weakness is still, for dollar rand side, is still the name of the game, although euro rand is coming stronger with a carry because of the weak euro.
That's the key. The weak euro is that's the conundrum in the equation, because we all know, at the moment it doesn't matter where you look, dollar strength, everybody's flying the American flag and saying the US economy is doing well, currency's bolstered, they're going to hike interest rates at some point. So if we look across the emerging markets, that's kind of the story that we're seeing. So if we look at the rand, if we look at technicals now, we're in uncharted territory. We're in that band that's only maybe traded previously in sort of 2002. So, from a technical perspective and certainly from what your clients are telling you, how does it feel to be in this type of top-end range in the rand?
I have to be honest and say that I feel quite nervous, because when you speak to your clients, you have to focus on, as we say, the carry trade and the current weakness of the euro and the strength of the dollar. And it sounds very rhetoric all the time.
Yes.
But as you say, we're moving into uncharted territory and you're very nervous. But what I do say to the clients is, what's on the table, if you're in profits on your currencies, then take it off the table and bank it. I'm not concerned too much on an export side of the euro, of the dollar against the rand. I'm very concerned about the euro.
Yes.
Because that continuation of weakness in the euro, I think, will eventually weigh on the euro, and we'll see cross rates against the rand much lower than what we are now.
But
so
also
I
the
would
thing
take
is, it's good
that.
for the euro, right? So this weaker currency, as much as it's short-term pain, so they're doing this quantitative easing, they've had the austerity measures, they're trying to control the budget deficits, which they've started to see come online. The only real way to see that economy grow is to weaken that currency, which effectively is what they're doing. And they're an export region. So, in terms of the longer term picture for the euro, what do you think the timeline is for this scenario, particular to the Eurozone, sitting at these levels? We were saying, I've said some people calling euro down at 0.85 to the dollar, so that's below par. Do you think that that's a viable option, or do you think we're going to see it start to come back online as we start to see the export sector pick up again?
I would reckon that we speak about a 9 to 14, 15-month period before we actually starting to see figures coming through. One of the criticisms about the Eurozone, and when they speak about Greece and everything, was that in the past they could weaken their currency to kickstart their economy and, you know, get the growth back onto path and so forth.
But then you talk about specifics.
Then you speak about specifics, but they should not forget is that, as been just said now you have a weakening of a currency across the whole continent. And that will kickstart, and so we will see those fundamentals change. And I think the Europeans, with quantitative easing and that, far more disciplined than what we, for instance, is in addressing imbalances. So I think we will see that. So I'm not so convinced about the 85 and the 90. I think we get a stop to this and a realization of normality before we
and
get there.
bringing back that region, because I mean ultimately we've seen what's happened in the US, and one of the strong, you know, we've had this issue in terms of the divergence between the Eurozone and the US. So the US is a single economy, they've got a single monetary policy, they issue their own bonds, they've got you know, consensus across all of their states. And then you look at Europe, it's so fragmented in terms of culture, in terms of income, in terms of the northern parts being much stronger, your export sector, etc. So how to drive that as a conglomerate? And I think that through this financial crisis, if anything, maybe you're right, the Europeans have learned that. So if we look at that divergence, Jan, this is the big play at the moment. What is RMB's view? We had John on last time talking about the fact that he thought that there's definitely going to be a rate hike towards the middle of this year.
A rate hike in South Africa?
No, in the US.
In the US. Yeah, it's certainly starting to look more that way. You know, it's now 11 out of 15 economists are saying a rate hike in the US in June, and possibly another one towards the end of the year again.
Yeah.
So, you know, it's starting to happen. The one thing that does kind of still worry me a little bit is, although we had a good non-farms out on Friday, so the number of people being back into the employment circle is a lot more than it has been for a number of years. But wage salaries aren't going up.
This is the thing.
And that is going to keep inflation down. So the US are kind of got to be a little bit careful in how they're going to balance their books, because they don't want to suddenly rush into hiking interest rates while wages are staying kind of unmoved and at current levels.
You're 100% right, and I think we discussed this, you know, just saying, you know, the underlying fundamentals, we know that, you know, there are still caveats in the system. I mean, the market is still coming back online if we look at particularly the US. The concern, though, is that it is about sentiment. So if we look at the volatility purely just in the rand, I mean, volatility is now sitting at 16. It was at 12 last month. That just shows you that uncertainty. One, it's because we're in uncharted territory. Two, we've got an enormously popular dollar. We've got a massive sell-off in the Eurozone. And that sentiment is driving the volatility in the emerging markets, and particularly in the rand. So we've seen this massive move, even though we've continued to see foreign inflows into the rand, which have largely protected us from, you know, significant selling off in terms of the dollar. So overall view, you know, I'm not going to make you think about it right now, but I just want you to give us, you know, what are the risks that you're watching out for just in the short term, just to, you know, in the next week, what are you going to be watching out for in terms of direction going forward?
You know, I think certainly on dollar rand side, we've got to be careful. Yes, the rand has moved a lot. I mean, 2-3 weeks ago, we were sitting in the 1170s. We've been up to 1230, and we're back at the 1220s again today. I think the next couple of weeks, we've got to watch internally as well as externally. You know, the weakening from perhaps 1170 to 12 is what we've been looking for and calling for a while. There's all our infrastructure problems that we have. We continue with Eskom and their ongoing debacle of not being able to keep the lights on. We had a budget last week where private income tax is going up, fuel levies are coming. We've already seen an increase in the fuel price last month due to the oil price. Now this month we're going to get that 82-cent fuel levy. So, you know, rand on the downside, I think in the next week or two is going to be fairly limited. So we're looking internally at what's happening, as well as what's going to, you know, what's going to transpire on the global markets. We got Fed next Wednesday. So we might get a bit of guidance out of Janet Yellen and company to see, what's going to happen with interest rates. Are we going to see them as soon as June, as market is now starting to anticipate, or are they still going to try and hold off for a while and see what happens?
And that's going to create the sentiment. So I think you're right, the Fed. And anything else from you that you're going to be watching out for?
No, I'm not going to add much more. What I will say is that I think what we need at this point in time, and I think that's what also drives all this up and downs at the moment, is like a yo-yo. But we need a little bit more certainty out of people from the Fed side and so forth, because the one says up, the other one says down, this one says up, and that becomes a yo-yo that drives the volatility. I think we need a little bit of clarity, and that's what we're looking for.
Okay, so the Fed's the big one to watch on an external basis. Right, so now that we know where we stand and what the lay of the land looks like, it's really time to pull out the big guns. So guys, I'm going to ask you to put it on the block. Let's talk about, let's look also at the Euro Rand, because that has been quite a big mover. I'm going to start with you, Andre. Do you want to head us off in terms of your Rand view, pound if you've got it, and the Euro Rand?
Okay. On the Euro, I'm going to give two things here. I'm going to say to the exporters, take the forward points off the table. Look for strengthening on the Rand against the Euro, 1270, 1310. So if anything on the upper side, take cover. Pound, more or less, I would call that between 1825 and 1865. Once again, exporters take cover on the higher end. Dollar Rand, very volatile, trading between 12 and 1250.
Okay, sure, that's a wide range, Jan.
Yeah, I mean, I think kind of Andre answered most of it. I mean, I certainly agree on the sentiment with Euro Rand. I'd perhaps take my limit up a little bit higher towards 1320 is definitely a sell in Euro Rand. Look for a pullback and a stronger correction on the Euro Rand cross. Sterling Rand, it's kind of range trading there a little bit. Daily close below 1825, we can possibly see it down to the 1810 levels, but I certainly think that becomes a buy. Dollar Rand, I guess anybody's guess at the moment. I'd probably be a buyer down towards the sort of the 1210 levels, 1213, which has got some good support in there at the moment, and look for a continual further weakness on that currency, possibly up to 45 in the next week.
Wonderful. Thank you very much, guys. So just in conclusion, trading strategy for the week. On the dollar Rand, looking for weaker levels. So if you see Rand trading below that sort of 1220 level towards 1210, take advantage if you're an importer. Exporters, just hold onto your socks because there is upside if you're looking for sort of 1250 levels. And then on your Euro Rand, that's where the exporters need to take the money off the table. If you see that 1310 or above, take advantage of it, because Euro Rand at this point in time is the area that is seeing the biggest moves in terms of weakness. If you need any further commentary, you are welcome to contact myself or CNBC Africa at CNBC Africa #CurrencyWars410, or myself directly at Brigid R. Taylor, and I will respond to you on the FX markets. Until next week, good luck in the trenches.